Have you ever received a bank transfer, wire transfer from abroad while living in Italy? You think it's just your money, right? Think again. Many expats and foreign residents in Italy fall into this common expensive assumption. Foreign transfer are classified as taxable income by the Italian tax authorities every now and then. In this eye-opening video, I will reveal the critical details you need to know about international bank transfers and Italian tax laws. Don't let a simple bank transfer lead a tax nightmare. You have to understand what makes a foreign transfer taxable in Italy. You have to understand how to prove that this transfer is not income. You have to understand the importance of clear documentation and try as much to avoid common mistakes. If you live in Italy or are planning to move here, this video is a must-watch to safeguard your finances. Let's start from the very beginning. You wake up one day, you check your bank account, there it is. Significant amount of money has arrived overseas. Maybe it's a transfer for your family, a repayment of a loan, or perhaps even funds from a property sale back home. A wave of relief watches you and say, great, you think, my money is here, safe, in Italy. But then, weeks, months, or even a year later, a letter arrives. An official-looking letter from the Italian tax authorities. This is not a friendly hello. It's a demand for taxes. Taxes on that money. The money you thought was simply yours, not income. And this is not a joke. This is a very real scenario that catches a lot of expats in Italian residents in Italy by surprise. They believe everything is in order, only to face unexpected and often substantial tax bills on that amount. Why? Because the Italian tax system, when it comes to money received from abroad, can be a complex labyrinth, a maze. And what seems like a simple transfer to you that can easily be misunderstood and misclassified as taxable income. The core principle here is straightforward. In Italy, you are considered a tax resident. You're generally taxed on your worldwide income. That means that your income earned anywhere in the world will be taxed in Italy, not just within the Italian territory. The challenge here arises when a sum of money enters into the Italian bank account from abroad. The Italian tax authorities, in their initial overview, might see this incoming money and assume it's income, especially if there is no clear documentation to prove otherwise. Let's say Maria, she is a Canadian citizen who moved to Verona, Italy, 2 years ago. She works for a Canadian company and she declares her foreign income to Italy. The last year, Maria's parents, who still live in Canada by the way, decide to help her with a down payment for a small apartment. They transfer, let's say, 50,000 to her Italian bank account. And Maria, of course, she is incredibly grateful. She knows about the gift taxes in Canada, and she thought that since her parents were Canadian and the money came from Canada, she didn't need to worry about Italian taxes. After all, it was a gift, not income, right? Well, not exactly. Under the Italian law, gifts can be subject to gift tax. However, there is a pretty nice exemption, especially for the gift between direct relatives. For gifts between parents and children, for example, it's 1 million euros is exempt from the gift tax. So, on the face of it, the 50,000 gift should have been tax-free. So what's the problem here? Maria did not formalize the gift. There was no written agreement, no declaration to the Italian tax authorities. It was just a direct, silent bank transfer with a generic description. So a few months later, Maria received a tax assessment from the Italian tax authorities. Seeing a large and explained inbound transfer, they considered this 50,000 as other income for Maria. They applied the standard income tax rate, and given the Maria's bracket on that time, now she owns a bill around 15,000. Why did this happen? Because from the tax authorities' perspective, without clear documents, any large sum entering your account is by default seen as potential income. they don't know it's a gift. They don't know it's a loan repayment. They don't know what they don't know. They see money and they see an opportunity for taxes. So what should Maria have done? Even though the gift was below the tax-exempt threshold, she should have created a simple written declaration of a gift signed by both her and her parents. This document should clearly state the nature of a transfer as a gift, either an email exchange, the amount, the relationship between the parties. In some cases, for important gifts, even a notary deed might be required, even though the 50,000 between direct relatives, a written declaration would be useful enough. You have to provide the proof to the tax authorities. Now, let's meet another scenario. Let's talk about Roberto. Roberto is a foreign citizen who's been living and working in Milan for 5 years. And before moving to Italy, he owned a small piece of land in Spain. And last year, he decided to sell that land for, let's say, 100,000 to free up some capital. He transferred the full amount from his foreign account to his Italian bank account. Roberto was excited. It was his own money from an asset he owned for years before becoming an Italian tax resident. He had already paid any applicable capital gains tax in the foreign country on the sale, so he believed he was in the clear. However, just like Maria, Roberto received a letter from the Italian tax authorities, and they had flagged this 100,000 inbound transfer. Since there was no explanation or documents tied to the transfer on his bank records, the authorities treated this 100,000 again as new taxable income. And for Roberto, depending on his other income, now the penalties are between 30 to 40,000, fully taxed ordinary income. The fundamental issue here is, as you can see, the lack of proof. Even if the money was yours and not new income, the Italian tax system operates on a principle of self-declaration and then potential verification. And if the audit, the verification process shows unexplained sum, they will argue on the side of it being taxable. What should Roberto have done? Well, probably some documents beforehand, like the original purchase agreement of the land, the agreement for the sale, showing the sale price, proof of the payment of any capital gains taxes paid in the foreign country, the bank statement showing the transfer from the foreign bank account to the Italian bank account, clearly linking, the funds of the property sale. By having all these numbers and data ready, Roberto could have easily demonstrated for the 100,000 was not income to Italy. But rather than fighting the Italian revenue agency with just your word, it's way better for you to have some data and official documents proving that. As these two examples clearly show, the devil is truly in details in the documents. Whether it's a gift from a family, a sale of an asset, a loan from a friend, or even your own saving transfer from a bank account abroad, you must be prepared to prove it. First, never assume that just because money comes from outside of Italy or because it's your money, it's automatically exempt from a potential taxation. Italy has its own rules for tax residency and worldwide income. And keep track, document everything. If you anticipate receiving a significant sum of money, take proactive steps for everything. For gift, for example, get a written declaration, state the amount, relationship, the purpose. For the loans, have a formal loan agreement outlining terms, repayment, schedule, interest. If you have property sale, investments, keep all the contract, the statements, the proof of origin. Show the chain of ownership along the years. And if it's about your own savings, if you're transferring money from your own bank account to an Italian one, ensure you can demonstrate the source and the scope of those funds. This might include also the previous tax returns from your home country of origin or bank statements showing those savings. Think of it like this. The Italian tax authorities is very intelligent and smart, but they're neutral. They see a transaction. That's it. So it's your responsibility to provide a narrative, the story behind that transaction, to verify and prove every detail. And if you don't, they will apply the default interpretation, which often means taxes.
At Studio Rigo, we provide world-class tax and financial guidance for expats and international professionals in Italy. We don't just help you stay compliant. We craft strategic tax solutions tailored to high-level individuals who demand precision and expertise. If you are serious about optimizing your tax position, visit our website or connect with us on social media. We work with those who value excellence, and we look forward to assisting you. Thank you for watching. See you in the next video.